Hey everyone, George here. So, of the contractors who don't succeed, usually the reason isn't because they aren't profitable. Usually the reason is because they run out of cash. So, in the spirit of the new year, I want you to make one financial New Year's resolution. So, if you're new to the channel, welcome. We talk all things accounting for contractors here. My name is George. And every single year, I see the same thing: good contractors, good tradesmen with solid revenue but constant stress because they don't know what their cash is going to look like 30, 60, 90 days out. So, on today's episode, we're going to talk about your 2026 New Year's financial resolution. And you're going to forecast your cash flow. Not once, not when things are bad, but consistently. So, without further ado, let's get started. Hey everyone. Today, what I want to do in the spirit of the new year is discuss this cash flow forecasting that I highly, highly recommend you do, especially in your line of work as a construction contractor, because obviously you have your cash flow needs every month. Your revenue, a lot of times it could be unpredictable, especially, projecting out 30, 60, 90 days out in the future. There's a saying I really like: revenue is vanity, but net income is sanity. And the net income, effectively, your cash flow here, this is going to give you all the sanity in the world, all the stability, the peace of mind. You go home on time for dinner, see the family, see the kids. You could go to bed with a peace of mind knowing that everything's going well. So right here that I'm about to go over is a really simple, basic cash flow forecasting model. You don't need a fancy accounting degree or Excel skills or need to be able to create macros. And, I wanted to keep it as simple as possible so that anybody who picks up this tool with very limited to minimal Excel skills can just use this thing and, have all the peace of mind. And all these numbers are obviously made up numbers. By all means, update it for yours. So, right here, all the way to the left, and you have your beginning cash balance. So here, you can go ahead and put the totality of all your cash that you have between all your bank accounts, everything, cash on hand, as of January 1 or as of December 31, effectively same balance. You could go, and so we assumed here $100,000. And this right here is going to be formulaically driven, where it starts with our beginning balance, adds in our cash inflow or outflow, net inflow or outflow for the month. And so this right here, this figure would be your projected cash balance at the end of the month after you've made all your collections and after you've paid everything off. So pretty simple. So here, collections, you can either have it in one lump sum, you can do like all your additions, everything you expect for the month in one cell, or what you can do is just add in various projects: project one, project two, project three. And either way, if you do that, it's just still the way the formula is set up is that when you insert rows, it's still going to pick up everything you added. So let's say, project two, you had 20,000 of cash inflow. Another project you had like 50,000. It's all going to be picked up and it's all going to be summed in and impact your ending cash balance for that month. Going back to what we had. So here, and these are always going to be positive values, needless to say. And here we're going to have a lot of contractor clients have, say, some short-term debt they're paying down, like say a bridge loan. Hopefully you steer yourself clear of these and you get yourself in a good financial position so you're constantly working out of your own cash and not having to borrow like these shark loans, like, 18, 25, 29%, whatever they are. APR. So, but anyways, it's not uncommon for a construction business to have these short-term loans that, span 6, 8, 12 months. That's why I left this field in for this. So if you do have this, by all means, placeholder. I put a couple of credit card fields here. Whatever you think is a fair estimation of your average balances every month. Always, of course, these cash outflows just have them in as negative values. Payroll, obviously, I have payroll to make. Subcontractors, any subs you have to pay. And I split it up into two payrolls for the month, payroll one, payroll two. And then, rent, housing, whatever else you believe, you're gonna have to pay every month. Payroll number two, that's the second payroll in the month. If you owe anybody, like investors, family, anybody who loaned you any money, that's another field right there. Say your truck payment, any insurance, and any taxes, and work with a CPA on to get a fair estimation of this, what you would owe every month. And here's a field that just kind of sums up all your cash outflows. So really, this is a cash flow forecasting tool. Um, this isn't an actual income statement. So on an income statement, say you're a pass-through entity like an S corp, you wouldn't have this show up, and you wouldn't have any loan principal pay down show up. So that's why a lot of times you can seem like you're very profitable on paper, and your CPA can tell you that you owe a good amount in tax, and you're thinking, where'd all the money go? Like I don't feel like I've been profitable. Whatever's come in has gone out. And it doesn't make sense to me that I'm paying, say, all this money in tax every month. But this is not an income statement projection so much as it is a cash flow forecasting tool. So that it's really really simple as you can see. You're just for every month in the year, going through all of 2026, you're projecting out, you're estimating your collections monthly. You're itemizing all your cash outflows, whether it's loan pay downs, all your expenses that you put on credit cards that you got to pay off every month, your payroll, your rent, housing, your vehicles, insurance, taxes, all that. And we get to what is this rolling cash balance every single month. And what I would recommend you do is once you actually get at this is an estimated cash balance. Let's say things turned up a little better than expected or something, and you ended up instead of having 111,000, you had 130,000 cash balance on hand as of, you know, January 31, 2026. So you can just go ahead and update that field. Give it some sort of a marker. Like if you mark it green in your mind, that means that that's an actual number. It's not estimated. And the whole projection would update like automatically based on that. But the key here is to just be consistent and be real with yourself, what you expect your cash outflows to be, what you expect your collections to be, and ultimately, like to get at things that way. So, hopefully, I mean, this again, I love geeking on this stuff. I could sit down and create Excel models all day long. But this isn't for that. This is to just, provide you some sort of a forecast on every given month that your collections are going to cover your cash outflows, that you're able to like, make all your payment obligations as they become due, and ultimately to give you this peace of mind that you're good for the remainder of the year. So I would recommend, making this, updating it. If you want to go into more detail in terms of, what payments are going to be due in what part of the month, I recommend putting this in chronological order. You could always make one tab for each month that goes into even more detail. And we're always happy to work with you on this too. And this is part of what we do is cash flow forecasting. So this again, for this free tool, I want to keep it as simple as possible. And then when you basically get all the way to the end of the year, here you have, what you expect your revenues to be, your short-term debt. This should be, the total of what you owe them. And this would lay out like everything cash outflow wise. And this is the number we all get at. We all want that bottom line net cash to basically be as high as possible. So this is just really a management tool, a cash flow management tool, and I wanted to keep it as simple as possible. So you can find this on our website. The link is down in the show notes. And if you have any questions, any nuances, anything you want to discuss, we're always happy to do that. Our calendar booking, everything is down in the show notes as well. So I hope you found this helpful and hope to see you in the next one.